Hello everyone, Old Wang is back again. The stock market recently fell below 3,000 points. Shouldn't Old Wang also say something about it? Because I see everyone talking about the inevitability of the market falling below 3,000 and staying away from stocks. It's like a video about A-shares' inherent flaws from birth. Interested friends should go watch that video. You'll understand that from the very design of China's A-shares, the limitations of its chief architects, and how Premier Zhu Rongji, the big boss, approached the stock market on a macro level. He had ill intentions and impure motives. This led to a distortion of the entire A-share issuance system and an absurd value discovery mechanism. Thus, A-share stocks lacked value discovery ability from printing to reaching investors. In that episode, Old Wang also explained that because the Communist Party was a big fan of the U.S. back then, they modeled China's CSRC after the US SEC. But not grasping the SEC's true essence, the resulting CSRC was all form and no substance. This caused China's stock market to stagnate for decades. Let's go back to May 2004. Old Wang, as a leader of Yihai Finance, was invited to a summit. This summit was held at the Beijing Friendship Hotel. Beijing was bathed in beautiful spring sunshine. What meeting was at the Friendship Hotel? A superstar was hot in international capital markets then. He descended like a deity among mortals. His name was Warren Buffett. Even Buffett, the god of value investing, got caught up in the early 21st century trend. Facing the wave of globalization, and President Clinton's push to bring Beijing into the Western camp, Buffett also believed China was a nation of hard workers. He thought China would soon overtake the U.S. as the top economy. So Buffett sent his partner, his global spokesperson, Mills Robert, to China to warm up the scene. His seminar only invited top financial and capital firms. In today's terms, they were all leading companies. What was the purpose? To explain Buffett's value investing theory, share first-hand experience, and establish a China Buffett investment fund dedicated to investing in A-shares. This was in the spring of 2004, a major strategic move by Buffett. I was a delegate at this seminar. Why am I recounting this history? Because all the issues the stock market faces today were already predetermined in 2004. Let's revisit 2004. Back in 2004, China's stock market was around 1,400 points, meaning it had returned to its 1,992 level. 12 years of golden reform and opening, from 1992 to 2004, yet the stock market not only didn't grow, but actually regressed. Everything else was rising in price, everything else was thriving, only the stock market stagnated. Something must have been wrong. So what was the problem? Buffett certainly didn't know. Buffett assumed China, Vietnam, and India's markets were all alike, so he thought China's market was at a historic low, and sent his global partner Miles Robert to China to raise funds. He aimed to capture half of China's stock market. His Chinese translator was called Miles Robert. This was actually the later President Guo's, the English name, Miles. Our English wasn't good back then, we thought it was pronounced Miles. I suspect the Chinese translator also thought it was Miles, so all his introduction materials wrote, Miles Robert. For further reading, search Miles Robert, who's still active in US markets today. He was very young at that time. He came to Beijing. That was his first stop. Below sat a crowd of public and private fund managers, about 100 people in Friendship Hotel's small hall, spouting eloquent words. They preached Buffett's value investing theory. We weren't really engaged. Why? Because we already knew Buffett's theory inside out. But what was happening in China, he actually didn't know. What he knew was we were losing our shirts, so he thought we were idiots lecturing us. After speaking, each had half a minute to ask questions. What does half a minute mean? It means you basically can't ask anything. What question can you ask in 30 seconds? I was sitting below. I had a sudden idea. I came up with an extreme idea. I used the Friendship Hotel conference room's draft paper, and the ballpoint pen provided at the meeting. I hastily wrote a few big words for him to see. It took less than half a minute. My question is, Mr. Robert, your speech moved me deeply. Can you understand what's written on this paper? Do you get the meaning? He glanced at it. He said, I don't know. Even though my English wasn't great, I understood that line perfectly. He had fallen into the trap. This paper has your boss's name and yours. But I wrote it in a traditional Chinese style. All the Chinese people present understood. Why did I add an M? Because on my first draft, I was one letter short of 24. So I added an and, flourish, making exactly 25 letters. The room erupted in applause. Robert was still standing there dumbfounded. All the Chinese attendees knew how to read it, but he looked like a complete idiot. At that moment, he was the fool, completely clueless on how to read it. While he was still stunned, I said, "This is how your speech felt to me today. I'm speaking English, I thought you'd understand. But you don't, and I'm baffled too. Because I clearly wrote in English, every single letter is from the English alphabet. Why can't you read your own name? It's because I understand English through our Chinese lens, and you understand it through your pure American lens. So even though we both use English, and assume the other will understand, we're talking about completely different things. It's like talking to a brick wall. We copied the U.S. stock market. We copied every single element from it. Every detail, term, and concept in China's market has a direct counterpart in the U.S. market, but we built it with traditional Chinese thinking. So you can't understand it, and I can't understand it either. I thought you would get it, but you're completely lost. That's the problem. What is this traditional thinking? We've had 5,000 years of feudal cycles here, followed by 50 years of communist experiment. Our minds are formatted by these concepts. What we copied from America is different. With that question, I seized the initiative and control of the room. I wanted to tell him, Chinese capital market professionals are as skilled as Buffett. The reason we fail, and Buffett succeeds, isn't because we're stupid. It's because this market is flawed. Even as institutional investors, we still can't make money. Why? The biggest flaw back then was split share structure. The term share reform didn't exist yet, it was just split shares. That was the widely used term at the time. Later, after Shang Fulin heard the report, he changed it to share reform, because Shang Fulin said, at that time, Premier Wen had just taken office. The constant splitting issues gave him a headache. Chen Shui-bian wanted to split Taiwan. Tibet was also seeking to split. Xinjiang was also seeking to split. If you create another split in the stock market, that would be politically incorrect. It's better to use a neutral term, change the word split to quality. After all, Chairman Shang is a political figure, a bureaucrat, so he changed it to split system. What is equity split? The stock market was designed to help SOEs and raise funds. It was essentially serving state-owned enterprises. These large SOEs were all 100% publicly owned. Political forces opposing the stock market said, if publicly owned enterprises list, selling stocks to individuals, would that lead to state asset loss? Would that result in de facto privatization? If China's SOEs become privatized, then the CPC's purpose when taking power in 1949. To solve this problem, they followed Deng's black cat, white cat. They used the good cat idea and compromised. This compromise brought problems. To silence critics of state asset loss, they are China's IPOs. All are new IPOs. In the West, some issue old shares. For example, if my company has 10,000 shares, I might sell 3,000 of them in the IPO. My original shareholders keep 7,000 shares, selling 3,000 old shares to the public. This is one model. Another model, I also have 10,000 shares. But I don't sell my 10,000 shares. Instead, issue 3,000 new shares to the public. So after listing, the total shares become 13,000. Among these models, China, my stock market, only has the second, not the first. Why? To solve state asset loss. It was called state asset loss. What assets? Today we know they lost everything. They are state liabilities. But why call it state asset loss? The Communist Party doesn't understand economics. Let me set up a topic. Soon, I'll discuss the CPC's planned economy. Its system is separate from Western commerce. Why does Xi Jinping move left? To move towards the Belt and Road, it will turn separation into complete split, and fall into an irreversible abyss. Let's start a new topic today. Going back to the birth of China's stock market, only newly issued shares were tradable on the A-share market. The original shares were completely non-tradable. This was to prevent loss of state-owned assets. If they're not traded, they can't be lost, right? So the stock market was born, but it was born paralyzed. Inherently paralyzed. A company's shares should have the same value. But if 75% are non-tradable, meaning none of the original shares are tradable, and only the new 25% are tradable, then the same stock has different prices. Every listed company naturally had two types of shares. One was called tradable shares, traded on the Shanghai and Shenzhen A-share markets. That's the A-shares we know. The other part was non-tradable shares, also called state-owned or legal person shares. They were not tradable. Later, demand emerged for state and legal person shares. Sometimes, to control a listed company or increase your stake, you had to buy legal person or state shares. Thus, a separate legal person share market formed. You can imagine their price was far lower than A shares, right? By how much? At most, 6 or 7 times. 20 yuan per share here, 3 yuan per share there. That was normal. This was the situation when Buffett's representative came. So, if you were a listed company's boss then, would you want to improve performance? You wouldn't. You wouldn't want the company to thrive. You wouldn't. Why? If you improved performance and the company thrived, the tradable shares price would rise, but your legal person shares price wouldn't. As the major shareholder, you gain nothing. Instead, you'd think of keeping state shares and legal person shares in a non-listed parent company. You treat listed companies as cash cows, and after funneling the money in, you channel it continuously into your group's pockets. That group company is your true interest, the core of your allegiance. Where you sit determines where you stand. All major shareholders, all controllers side with the group company. They side with the major legal person shares. They are fundamentally at odds with A-share investors. It's a zero-sum game. If even Buffett doesn't know this, why invest in China? Would your A-share fate be any better? So after I said this, Robert, every time he came to China after, he never invited me again. That's the reality. He came a few more times, but I never got another invitation. He thought I was causing trouble. Actually, I wasn't. The split share structure reform we pushed aimed to solve this very problem. Was it solved? It was, and it wasn't. The solved part was the CSRC and Premier's fear. Merging non-tradable with tradable shares would crash tradable share prices sharply, while legal person shares would rise. How to solve this? Retail investors would be slaughtered. Our solution was the split share reform. The plan we designed, Zhang Weixing and I, is still patented. We never received a cent in royalties. The authorities wouldn't allow it, saying a private firm profiting from party policy was unprecedented. That was their only compensation for us. So they said, you consult on the first 25 reforms, only you know how to design the plans. The first pilot batch was 25 firms, you handle it. We'll pay you something, 100,000 yuan per firm. That's how they brushed us off. After our first one, brokers figured it out. They just copied our work after seeing it. Thus, China's split share reform launched. What was the reform's core idea? How did we design a solution back then? Simply put, the real market driver isn't static fear of price drops or rises. Stock value is determined by expectation and credibility. Stocks aren't commodities. Commodities satisfy practical needs. They have use value. Stocks have no use value. What use is a single share of stock? Can higher stock power your fridge? No. Can FAW stock give your car wheels? It cannot. What value does it solve? It solves the value of me betting you need it more than I do. In other words, stocks don't satisfy physiological needs. Rather, after I acquire it, the psychological need to adapt to you possibly snatching it. This is confidence and expectation. So, as long as you give him confidence and expectation, you can quickly attract massive funds into A-shares. You can easily resolve the crisis of legal person shares impacting the A-share market. So, we designed this plan back then. Listen carefully. This plan consists of left and right parts. The left side. Countermeasure. Give shares to tradable shareholders. Direct gifting or targeted capital increase. What's targeted capital increase? After increasing capital from reserves to issue new shares, legal person shares give up all ownership rights. All new shares go to tradable shareholders. It's essentially giving shares in disguise, but legal person shares aren't reduced. This was to address large central SOEs. If large SOEs directly gave shares, it raised state asset impairment concerns. Li Rongrong firmly disagreed at the time. Li Rongrong was head of SASAC. Outranking Shang Fulin, he slammed the table at a state council meeting. I'm SASAC director. I'll cooperate with your work, no problem, but asking SASAC to give such valuable assets directly to investors? Where's the legal basis? There isn't any. So what to do? We compromised. Targeted capital increase then. Again, it's the 1990s, involving the stock market, our ancestors' wisdom, right? All right. There's another type. The third option was direct cash payments. Cash compensation. Some listed companies are cash cows. Giving cash directly was also agreed upon. Because giving cash is like bribing investors directly. Once these investors vote yes, it's done. These three models let any A share undergo split share structure reform. Each became a profitable land redistribution process. An unprecedented bull market emerged, called the split share structure reform bull market. This bull market surged from 1,400 to 6,000 points, all because of this split share structure reform bull market. The patent designers were me and Zhang Weiqing. What's the right side then? The right side was equally important in our design. Its guarantee system. Both sides' share prices become identical. After equal rights for all shares, you can't play dirty. Benefits must align us all. How to guarantee it? You ensure A shares' long-term profitability. Dividends. Meaning all split share structure reform plans almost include performance commitments. After the company achieves full circulation, as a major shareholder, I didn't instantly gain massive wealth to dump on the stock market. First, I committed to not selling for 10 or 5 years. That was the first part of the commitment. The second part required a commitment to annual post-tax profit. Earnings per share had to meet a minimum. Second, the CSRC has completely failed in its duty. Why do I despise them? Why do I call it systemic corruption? It's not about them taking bribes. They are neglecting their duties. They hold positions but don't do their jobs. This is a major reason China's stock market is a mess. After the share structure reform, nearly 90% of A shares had performance commitments. Did anyone check if they kept those promises? No, hardly any company fulfilled them. If that happened, the US SEC would arrest people immediately. It's fraud. The market is full of fraudsters. Yet no one is held accountable. That's why China's stock market performs so poorly. It completely betrays their reform promises. It's a total slap to the CSRC's face. They act as if they see nothing. Why does no one care when the chairman changes? This is a systemic flaw within the party. There's no policy consistency. No professionalism in governance by experts. They fail to see the root of problems. Imagine, if a complete, professionally designed model was followed. After the full circulation reform, after resolving the paralysis issue, if performance, dividend, and no-sale pledges had strict oversight, how could there be no value investing? In Japan, Canada, and the US markets, some stocks offer long-term dividend yields over 6%. Western bank interest rates are only 2 to 3%. Over the past decade, listed companies paid over 6% dividends. They maintained this for 10 to 20 years. So pension funds and passive investors buy those stocks. Why? Even if the price drops, they don't care. They know it's a good stock. They're not afraid it will fail. It won't fail. It's a top company in its industry. A mainstream company. How could it fail? As long as human society and economy exist, it will keep operating. It gives me 5%, 6%, or 7% annual dividends. I can live a comfortable retirement with that income. This is the proven way to build value investing in China. Today, I watched a segment by Wu Yue Sanren. It was a 20-minute show on the market falling below 3,000. He's not from this industry. He doesn't see these technical issues, but he spoke the blunt truth. He said, after I go to Japan, I'll buy some good stocks. I won't even watch their price fluctuations. Because good stocks in Japan pay hefty dividends. I bet his dividends are over 5%. So your 100,000 yuan yields 5,000. You get 5,000 yuan in dividends. What are you worried about, right? If you have $1 million, you get 50,000 in dividends yearly. That covers your expenses. So, this is true value investing. Does China's stock market have this? Are there such companies? Maotai earns so much cash each year. Do you pay out a single cent in dividends? PetroChina, why have you lost everything? You're essentially a money printing machine. Why don't you give dividends to everyone? If you could pay 5 or 6% dividends, whether PetroChina stock rises or falls, you'd know just by thinking with your butt. Why be a stingy iron rooster? Because dividends don't benefit them, and not paying dividends doesn't punish them. Their promises were like farting into the wind. They're all fraudsters. If Zhai Shenying is a small scammer, they are the big scammers. How much did old Zhai scam from you? At most, 2 billion. Maybe even exaggerated, probably just 7 or 8 billion. Each IPO scams you of 7 or 8 billion. Additional offerings scam another 7 or 8 billion. 20 years listed, each scams tens of billions. There are thousands of listed companies. Are they all fraudsters? You can't stay away from the stock market. It's not like avoiding drugs. What can you do? What are you preaching in such a market? A Chinese Buffett jumping off a building is right. Playing seriously ends with jumping off a building. So, old Wang says stay away from the stock market. Stay away from drugs. When talking about A-share value investing, my anger flares up. Because Canada has many excellent companies. They are very mainstream. Top-tier companies. Like pipeline companies. Like oil and gas companies. Like banks. Canada's banks and insurers are world-class. Major shareholders are Li Ka-shing. Husky Oil's major shareholder is also Li Ka-shing. So these companies are very stable. They pay cash dividends of 5.8% or 6% yearly. Plenty of companies with great performance. P/E ratios of 16 or 12. You see such enterprises. You see such companies. Then look back at A-shares. Isn't the A-share market a garbage dump? Where is the value investing there? A perfectly good stock market. A perfectly good China. A thriving Chinese economic development scene. These bastards completely squandered 30 golden years. They utterly ruined it. This is far worse than the Qing dynasty losing the Sino-Japanese War. China's stock market was meant to be a major engine. It should have replaced real estate as an economic engine. The Shanghai and Shenzhen indices should rival the Dow Jones. And what is it today? It crashed through the 3,000-point mark. Don't they deserve to be shot? They deserve to be drawn and quartered. What were you doing, Li Keqiang? You just played the political game. Li Keqiang, do you even understand? Do you get any of this, Li Keqiang? You understand nothing? When Jiabao understood nothing, alright. When Jiabao muddled through for 10 years, then the market fell under Li Keqiang's 10 years. 2012, 2013, and 2014 were bad, too. How did Li Keqiang try to save it? Let me tell you about Likeonomics in action. He had the police arrest fund managers who sold stocks. I'm not spreading rumors. Everyone in the industry knows. Insiders all know what happened in 2015. Shanghai ones were held at a Chongming Island barracks. Shenzhen ones, at a Damisha barracks. No charges were filed. No other country uses police to prop up markets. Isn't that absurd? What the hell is this? Aren't you just silencing everyone? Is this any way to fix things? Is this what a competent leader does? What good can you expect from people like this? One of those detained in Damisha was a fund manager. He managed a mainland A-share fund for a Hong Kong casino tycoon's family. A Taiwanese was also locked up there. There were no formal charges. His family was desperate to get him out. They pulled strings and reached our old leader Wang Qishan. He was from the State Commission for Restructuring. Wang Qishan was a big deal back then. They called him the Eighth Prince. What did Wang Qishan say? He said, forget it. Coming to me now, there's nothing I can do. This matter isn't under my jurisdiction. Moreover, the Standing Committee has already decided on it, but I can guarantee you one thing. First, they won't be mistreated. They're just being held for study sessions. Second, they will be released in 3 months, guaranteed. That's all he said. Why? Because there were no charges. Their only crime was selling stocks in a bear market. You can't sentence someone for that. It's impossible. So even the top PSB leaders were frustrated. How can we just act so recklessly? But the higher-ups said, you must act recklessly. So, recklessly they acted. They just went through the motions. After 3 months, they were released. The stock market, of course, got no bailout. No rescue at all. It just kept falling. It couldn't hold 4,000 points. Then 3,000 points. It couldn't even hold 1,800 points. That was called the 1,800 point defense battle. Later, the market hit bottom. Then it bounced back to today's 3,300, 3,600. Then, after President Xi's Belt and Road Forum, it fell back to 3,000. Back to 3,000. Hu Shijin talked about buying the dip to save it. Still bragging, I see Lu Jiapeng is still dialoguing with him. Lu Jiapeng is still hanging around there. No ambition at all, he's practically a living fossil. Still stuck at that same level, completely blind to reality. He's actually sunk to dialoguing with Hu Shijin. The two of them chat about A-share value investing. They talk about believing in the nation's destiny, believing in A-shares. Isn't Lu Jiapeng just embarrassing? So, I'm telling you, 3,000 points is not the bottom. In 2015, the rescue started at 1,900, 1,800 points. There's no reason it can't fall to 1,800 now. To 1,900 points. Do you think today's economic fundamentals, or the governance of listed firms in the CSRC's supervisory standards, are qualitatively different from 2015? No difference at all. They're even worse, right? So, it will keep falling. People will jump. But this is just the beginning. The jumping is just the first wave. The second, third, fourth waves will follow. It has to be this way. If it's not, that's not normal. The market heading to 2,000 points. That is the inevitable trend. So China's A-share market is an absurd junkyard. Stay away from the stock market. That's Lao Wang's key advice for today. Goodbye. Remember to like the video. The like ratio is dropping. Bye.